Hello Accounting 101 students. In this video, we are going to go over recording transactions for issuing shares of stock using our Chapter 11 question number 4 in our end of chapter practice. So in this problem, we have Sunland Company that had a few transactions during the current period. So we're going to start off by recording the date of each of these transactions. We have one on June 12th, another one on July 11th, and our last transaction on November 28th. And what we have here is the company has issued shares of common stock, they have issued shares of preferred stock, and then they purchased shares of treasury stock, which means that they are purchasing back their own common stock from their investors. So we have three different scenarios here. So we're going to first start off with the common stock that was issued on June 12th. So on June 12th, the company had issued 83,500 shares of $1 par value common stock. And we are told that they were given a certain amount of cash. So typically, so far in our semester, we've learned that a company is going to debit cash for the amount of cash received. In this problem, they received $313,125 of cash in exchange for common stock. So we're going to credit our common stock, which is categorized under equity on the balance sheet. So far in the semester, we learned that our common stock is just going to be credited, but what we learn in this chapter is that now we need to split up our common stock into two separate accounts. So we're going to have the common stock, the dollar amount that is issued at the par value or the stated value in one line item, and the additional amount that is provided that is above the par value or stated value is referred to as paid in capital in excess of par value. So we need to split up our common stock into these two specific accounts. So we're going to split up common stock and paid in capital in excess of par value. And we need to specify this is on the common stock because in our next problem, we're going to have a similar account, but it deals with our preferred stock. So our common stock, we're going to take the number of shares. In this problem, we have 83,500 shares times the $1 par value. And in the past, there used to be a par value, which was the amount that needed to be retained in the company for legal reasons. And these days, there is a par value or a stated value that is noted, and that is just separated out. So we need to include the common stock at the par value, and whatever amount that we received above that dollar amount goes into this account. So we're going to take our $313,125 cash minus $83,500, and that's going to equal $229,625, and this is going to be the amount that we're going to credit. $22,625. In our next scenario, we have our preferred stock. So preferred stock is a separate class of stock, and sometimes companies issue preferred stock for several reasons. Generally, preferred stock is going to be a little bit more expensive than the common stock, but sometimes with preferred stock, you have a guaranteed dividend. So that's one of the things that you want to read about in our class. And we're going to start off by recording our journal entry. So anytime you have a stock transaction, the company receives cash in exchange for stock. So this time, instead of using the word common stock, we're going to have the word preferred stock. And we're also going to have a separate account for the paid-in capital in excess of the par value or the stated value on that preferred stock. So for the amount of cash, they didn't tell us the dollar amount of cash. So we're going to take the number of shares and we're going to multiply that by the cash amount per share. In this problem, it is $105 per share. And when you multiply that out, you're going to get our cash amount of $362,250. Then for the preferred stock, you're going to take the same number of shares and you're going to multiply that by the par value. So you can see that the par value is significantly higher for this preferred stock. It's at $101. And not all companies are going to have preferred stock. This is just an optional separate class of shareholders. And whatever amount is the dollar difference between the cash, so $362,250, minus the preferred stock at the par value of $348,450. In my poem, that's going to equal $13,800. This is the amount that you're going to credit. In our last scenario on November 28th, the company has purchased 2,950 shares of treasury stock. So treasury stock refers to repurchasing a company's own shares of stock. So for this transaction, when you're going to repurchase your own shares of stock, you're going to use your own cash, and what you're going to reacquire will be the common shares. But we're going to keep track of our treasury stock in a separate account that is referred to as treasury stock. And in this problem, they actually told us the amount of the cash that we're going to pay. So $8,450 will be your debit and $8,450 will be your credit. One of the most helpful things to do in a problem like this is to draw out the T accounts. So I recommend drawing out the T accounts for cash, for common stock, for preferred stock, and your treasury stock, because these are all separate accounts that are reported in the general ledger. So we have our cash, which we initially had received $313,125. Then for our preferred stock, we received $362,250. And then with our treasury stock, we spent $8,450 to reacquire some of our common stock shares. Then we have our common stock, and this is going to be a credit, and we're going to include our amount of $83,500. And in our separate account, we're going to have our paid-in capital in excess of par on the common stock. I'm just abbreviating just for the purposes of not having enough space right here. But we're going to include the amount that was paid in excess of $229,625. Then we're going to have our T accounts for our preferred stock and our paid-in capital in excess for that preferred stock. So this will be a credit, 348, 450. And our paid in capital in excess. And I want to separate out that this is on our preferred stock of 13,800. And then you'll notice that our treasury stock is going to have a debit balance of 8,450. And one of the other things that you want to do is keep track of the number of shares outstanding. So our number of shares outstanding for the common stock will be the number of shares that were issued, which is going to be 83,500 minus the treasury stock that was repurchased, so minus 2,950. So that's one of the important things that you want to do in a problem like this, is to keep track of the number of shares that are outstanding on both the common stock and the preferred stock. And you cannot combine these into the same amount. And then on our preferred stock, we have 3,450 shares. All right, thank you for taking the time for watching this video.